Hi, this is Saev Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexBSummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexBSummit.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So you can see that our warnings were not in vain. Not occasional recently. So yesterday we talked about the possible taking the long position, and I said that currently, at least in the position where market were standing yesterday, I feel not comfortable for taking a new long position because we have few bearish signs on the intraday charts. Overall market performance doesn't exclude the chance of the deeper retracement, and I said that for a daily trading on the daily chart, on the fallout time frame chart, it is more reasonable, at least to my mind, is to wait either for a deeper retracement or for upper breakout on the current 122.65 COP target and moving higher. Just because, as I said, in the case of the upper breakout, if even we will not get this retracement down, this will be relatively safe moment for taking the new position in this area, because market will break up all the resistances all day. All of them will stand in the past in this moment, and it will be aimed on the taking out of the top. And while market is moving, aiming on the top, this will be area where we could take the long position. This will be relatively safe because it's a really high probability that we will move stops to the break-even as market will come into the top. That's the logic. At the same time, currently, as you can see, that we haven't got the breakout, but instead we've got the deeper reaction on the COP target. I'm not talking currently that we indeed will get this drop to 1975, but also we can't exclude this as well. But at the same time, you can see that on the top we have reversal, bearish reversal candle. This is engulfing, but more strong engulfing. It's because market creating the new top or standing near the top of the previous candle and close below its lows. So market on an intraday chart is reversing, show the reversal swing down. It means that usually it has the continuation, and it has, well, forms the shape, some kind of the ABCD at least, or even could trigger deeper retracement. So this is definitely bearish sign. This is first moment. Second moment, guys, we finally got the changing of the trend on the daily chart. You can see currently it stands bearish by the MACD, and currently we could, with the confidence, talk about the bearish divergence that has been formed here. So now it is confirmed just because the market shows the crossing of the MACD lines. Finally, do not forget about the wedge pattern. With this reversal candle on top, it seems the chances more that this wedge pattern will work in the classical mode, not in the direct upward breakout, but probably it really could trigger some deeper retracement. So currently, of course, some miracle happens and everything could change in the blink of an eye, especially if some statistics will be released and some another external driving factor will come on stage. But currently, based on the technical picture that we have, I wouldn't consider taking the long position immediately. So it means that since we've got more bearish signs currently, it makes sense to wait a bit more and see what will happen later, because that pattern definitely stands in favor of the deeper retracement. In the follow time frame chart, you could see the bears have won recently as double repo here, although it seems like we have no double repo, but actually we have it, or better to say had. Yesterday we talked about this thrust up. This was closed below 3x3 and drop almost back to the lows. It's a great drop and double repo that has been worked properly. It's really, really great. So here we also have the divergence of the same sort, and our wedge pattern of the market stands currently close right at the bottom of this wedge. Market also returns back inside of this consolidation, which is also mostly look like the bearish. So currently we do not need these lines anymore. One thing that we need to keep an eye on today is early reversal inside of the wedge. This is a classical example of the common bearish breakout. So for instance, market currently showing the pullback up from the lower border. But if market will stop somewhere in the middle, turns right back down and shows downside reversal and breakout, this will be bearish sign. It means that we will go in lower. So if you have taken the short position recently, that's great. So you could keep them. maybe move stops to the break-even or tight your stops, protect your position, protect your profit somehow. Because indeed, market hasn't formed any new tops, so stops was intact on the bearish position, and double repo works nice. So here, everything stands good. On the bullish side, as we said yesterday, we keep an eye on the possible bullish grabber here, but it has not been formed. Market just turns trend down. And you can see on the hourly chart, market has dropped out of a triangle that we discussed with the butterfly. It means that actually we've got no background for taking a long position, or if at least you have taken it, it probably was very small loss on your position, because here was the confirmation of the failure of the bullish context, and I mean on intraday charts. And as you can see, bullish setup has been erased. That's the reasons, guys, why I'm yesterday warned that it really could happen. So, and why we call mostly for waiting for more clarity before taking the long position. So, currently, well, on the long position, I still think that we could wait a bit more and see what will happen with bearish patterns that have been formed on the daily chart. Particularly speaking, I would like to see how reversal candle and bearish engulfing on the top plays out, as well as the wedge pattern here. It's most interesting. Well, since we are searching chance to go long in the euro currency, we're not considering currently new short positions. Well, that's why we're mostly think that it would be better to wait. Again, wait and see for a deeper retracement. Currently, it becomes obvious that market shows some bearish signs, and its deeper retracement should happen. For the bearish traders, well, maybe you could try to catch some other bearish patterns that might be formed here to increase your position or take the new position to the downside. But this is, guys, on the bearish side, this is scalp trading. So mostly you're trading with the possible downward action, some minor retracement that could happen on the daily chart here with this some downward continuation, and based on the pattern that has been formed recently. That's why currently we're not considering it for our purposes. Well, mostly have some bullish view on the euro currency and watching for taking the long position. But if we will get some bearish patterns, probably you could consider them as well, based on the engulfing and reversal pattern that we have. So, for instance, with this upward retracement, you could try and take the short based on some fib levels on this drop here, because here it seems that we'll have another double repo in opposite direction. It's very small scale, right? You can see bullish double repo here is forming, so already stands in place and moving higher. So you could use it for maybe taking the short position, some retracement somewhere, testing of this resistance area, 20 to 25. It might be one of the levels that you could consider. But as I said, this is a bit out of topic for our video. It's mostly stands for intraday charts. So that's our view on the euro currency right now.